What would you do if I told you that Canada is probably one of the best places to invest right now, thanks to a dramatic shift in the Canadian economy and a huge refocusing on what Canada does best, natural resources? Today we're going to talk about critical minerals, something that the entire world wants and that Canada is investing tens, if not hundreds of billions of dollars into becoming more commercially available. We're going to talk about one of the biggest companies in Canada that deals in this space and how that company is refocusing itself and becoming one of the very best opportunities to play the AI trend and to really be in the picks and shovels of the coming energy and infrastructure boom. Welcome to Golden Arch Investing. My name is Liam. On this channel, we talk about investing in Canada. If that interests you at all, please do like the video and subscribe to the channel. Today's video is going to have a couple of different pieces. First, I'm going to talk a little bit about what is going on with Canadian resources. Why is it such a valuable space? And why are critical minerals particularly one of the best opportunities to invest in Canada right now at all? We're going to talk about what Tim Hodgson has said. I've got the screen cap here on the screen beside me. And just a dramatic statement there, right? What a photo, first off. But also, Minister calls for wartime effort to build infrastructure. That's quite a statement. What does that mean? We're going to talk about that. Then we're going to talk about what Teck Resources has been doing right now. How have they positioned themselves as a critical minerals champion? And how are they going to exploit some of Canada's big advantages, particularly as we see Mark Carney going to the EU, building this new Canadian Defence Pact and pledging tens of billions of dollars towards this infrastructure specifically as defense spending? And then we're going to talk about a little bit of actual analysis into how Teck Resources is really a play on the growing AI and data trend while still being a massive copper producer at a time when electrification and just investing in our energy infrastructure is so huge in Canada. Let's start with that article from the Minister of Energy and Natural Resources. We're on BNN Bloomberg here. Again, what a fantastic photo of Tim Hodgson looking dramatic into the camera and the idea of a wartime effort. Bringing, of course, images to people's heads of this, dramatic coming together. We're going to get stuff done and we're going to overcome all of the challenges. Now, I talked about pipelines just the other day on the channel. And in Canada, the default response whenever any politician, left or right, says, we're going to change things, is everybody saying, no, you're not. No way. No way you're going to change things. Canada never changes things. The other side's corrupt. The other side is evil. And we're never going to change. But you got to admit, there have been a lot of moves being made in the last little while. Be it the whole idea of new defense infrastructure spending, be it all the bills that are flying through Parliament, being the Conservatives and Liberals working together on something after just calling each other names for the last 10 years. It has been a quite wild time in Canada. And as a Canadian investor, it means there is time to make big moves because there are new opportunities being unlocked by all of this change. Now, of course, we've talked about investing in energy, but here, a big part of this bill, in my opinion, is going to be the focus on minerals, particularly minerals that are crucial for defense, for AI, and we call them critical minerals, but it includes all sorts of different things. Now, Tim Hodgson here is talking about the infrastructure required. And the idea here is that in order to make these minerals commercially viable, which means in order to make it reasonable for a company to explore, develop, and then mine these minerals, you need to have significant energy and transport infrastructure to places that are insanely remote. I don't know if any of you have spent much time in the Canadian Shield. I grew up not far from it and I camped up there. It is definitely not somewhere that is easy to build on. Think about how few large Canadian cities there are up northern Ontario, northern Quebec, up into the Northwest Territories, even Nunavut, right? Obviously that space is quite sparse. Same can be said for the high Arctic. Same can even be said for most of the territories. And of course, the Rocky Mountains are their own challenge onto themselves. But when it comes to this kind of infrastructure, you generally need big support from the government. And he looks like he's calling for that. The One Canadian Economy Act, of course, is what has been spurring this all on. They've called it BC5. I almost said that wrong. But the whole idea is that they're going to have these sort of nation building projects that they can get fast track approval for. But they've also talked about some actual like effort from the government to make things happen quicker. The one big thing is the major projects office that gives people a point of contact, keeps people on track, and also, of course, then deals with the challenges of, okay, how do you consult people and how do you get through those things? And by mentioning this, by talking about how Canada is going to step forwards and actually take a lot of the pressure off of private companies, it looks like he's trying to encourage more people to step forwards, particularly in the sort of different areas of industry that have seen huge barriers of entry. One of the big ones being mines. Of course, let's talk about Teck Resources and how they fit in, because this came just a few days after this article, which was published just a couple of days earlier, where Teck Resources eyes output boost for chip-making metal germanium. They have been looking to expand production of this effort and is currently talking with governments, including Canada and the United States, on available funding. They want to diversify supply of critical minerals needed for tech and defense sectors, as geopolitical tensions and trade barriers complicate access to materials mainly produced or refined in China. Specifically, of course, germanium, which China supplies about 60% of the world's supply of. China specifically put on export curbs of this metal to the United States, in kind of like a, if you can't have this, you can't make this stuff. If you can't make this stuff, you can't make weapons, AI, even electric vehicles, right? All these different things that, of course, the United States wants to be building. Having the production of this germanium here in Canada, of course, would be a massive boon. And Teck Resources sort of saying, hey, we're reaching out to the government. And then a couple of days later, the government saying, hey, we're ready to go. We're ready to support these projects as soon as this bill gets made. That sounds like a match made in heaven. On top of that, think about what these resources are. It's one thing to try to convince people that a pipeline project needs to get built, right? I've talked about the economic potential of Canadian energy, but politics is politics. People are just set in their views. It's a whole other thing if you're talking about a critical mineral that is crucial for so many things. Okay, people might not love that you're using it for defense spending, but those same people who don't like the idea of defense spending, well, they're going to love the idea of you using it in electrification, using it in green energy, using it in electric vehicles, all these different things. Of course, the flip side of the coin, maybe they don't think that's a good use of those minerals, but they do think that it's important to be used in defense spending. It's important to be used in building, machinery, in building infrastructure, in building like data centers and actual big economic projects, right? So everybody wins when you mine this stuff in Canada, apart from the people who are directly there, who the government then is going to have to deal with and consult with and then, support or whatever that looks like in that case. And Teck Resources is uniquely positioned to be a good option for this because of a couple things that we're going to dive into in this article here. This is actually a little bit older. It's over a month old at this point, but I think the headline here just completely reframed my view of Teck Resources. Teck Resources is a company I've kind of skirted around talking for a while on the channel, because at the same time as they are sort of an interesting Canadian mineral company at a time when Canadian resources are a boom, they've also had quite a lot of challenges. They've had some projects they tried to get done that have failed, right? They've been sort of struggling in a lot of different ways. But when they talked about this specific viewpoint, suddenly I understood why they're so perfect to work with the government on these new projects. Because it's just that. They're a low-tech play on high-tech growth. On top of that, I think they're a low-tech resource play on defense spending. The government can use building this infrastructure to boost our mineral exports as defense spending money. That's part of what they did at the new NATO summit. That's unlocking billions of dollars to go into this infrastructure that can help Teck Resources supply the chips, the metals, the minerals needed for European and Canadian defense. On top of that, of course, we're right next door to the Americans, and they desperately need this stuff. Some of the biggest AI companies on earth are in the United States. They need this stuff. They're building some of the biggest chip fabs on earth, right? A lot of people need this group of materials, but of course the specific ones that Teck produces, and seeing Teck boost that output is huge. One of the big things Teck Resources does right now is copper production, and they have grown a lot in this world. They've struggled a little bit on pricing over the last little while, but they're reaching over 800 KT by 2028, so 800,000 tons. The sale of met coal operations refocuses Teck on base metals, so they sold away their coal business to focus on metals, to focus on these resources, to focus on these mines, specifically copper, where there's a big demand from electrification. Now, they mentioned decarbonization as another support, but I don't even think that's the interesting option here in Canada. Think about some of the big projects that we've talked about that people want to do. I'm thinking of two. One is electrification up into the Northwest Territories and Nunavut. It's been a big part of that Western Canadian corridor. Well, shoot, that's a lot of copper they need right there. And two is that big Nova Scotia offshore wind idea that they proposed over there. That's just two projects that are going to demand thousands of tons of copper. On top of that, every other infrastructure project is going to need some of this, because electricity has become just such a key part of the story for all of this. We're even seeing steel smelting being done by electricity with these new, electric steel mills coming online in Canada. There's just so much demand for this stuff that it makes a lot of sense for them to be the homegrown supplier. And even if the global market doesn't look great, well, Canada's demand is ramping and they're there to supply it. On top of that, they're talking about going into the critical mineral space, which boosts the way that they're going to benefit from that electrification trend, because those critical minerals are going to be a multiplier on what their copper and other metals business and their base metal business does. Their valuation is also pretty attractive. They've got solid EBITDA margins. They got robust free cash flow. I believe this is an image of one of their mines, but it could just be an image of a copper mine. And it's been, one of the most often sort of orbiting the channel questions of okay, when are we talking about the mines? And as usual, I really like the idea of buying one of the big players in an industry that you're not certain is going to have the sort of boom you're expecting. We're not certain that we're going to see this critical minerals expansion in Canada. We think it's happening. A lot of people want it to happen. But investing in a junior miner is fantastic if it works. And I'm not an if it works kind of guy. That's not how I invest my money. I'm not saying it doesn't make sense as a satellite position to have, a couple $100, even $1,000, depending on your size, in a junior mining company that's complete speculation. That's okay, because that's money that you might have spent on something else anyways. But I don't think you should build that into a core position, because even though you have the potential to get a 10 bagger, you also have quite a high potential that you're going to just lose it all. When you invest in a big giant like this, yes, your upside is capped, but so is your downside. And it's not a brutal stock to hold in the meantime while you wait for things to get done. And as every commenter likes to remind me, things don't move fast in Canada. The actual projects will take a decade, 2 decades maybe, and some of them might even fail. As stock market investors, we're really just here for the stock ride. We're here to see the stock prices start to improve, and then we got to make decisions about when we enter, how we allocate. Do we dollar cost average? Do we lump sum buy? I'm a DCA guy into my long-term holdings, but there's some stocks I'm going to buy once and I'm going to sell once, right? And then of course, where do you exit? What percentage are you looking for? What pricing are you looking for? What multiples are you looking for? Now, I'm going to go through the rest of this article, but I just wanted that analysis to be out there, that my frame of reference for tech. Okay. There's a cottage industry devoted to finding stock ideas that are tied to major secular growth items like AI and data center CapEx, which is the big spending from those big, Facebook, Google, Amazon, on building up the actual data centers and on spending money on these chips, as well as automation and electrification. Of course, think about all the, the robo-taxis just launched in Austin. Seen Waymo expanding all over the United States. There's a lot of automation in that world. Seen automation of tasks. A lot of white collar tasks are being automated. Of course, electrification. Yes, in the autos, that trend has struggled a little bit, but we're seeing it more so in industry. Particularly think about SMR. It's a big concept where we're going to use electricity instead of hydrocarbons to power some of this industry. Now, how strong and robust is that trend now? It might not be giant, but it's definitely growing. That brings them back to TECK Resources. Copper is an essential commodity in electrification and decarbonization, and between growth in conventional electricity generation and distribution, batteries, renewable generation, and the move towards more electrical systems in buildings and factories, copper demand growth is likely to accelerate. The sale of its met coal operations in 2024, Teck is now much more focused on its base metal operations, copper and zinc, in particular the multiple growth and expansion projects in the queue that could drive annual copper production from around 528,000 tons in 2025 to over 800,000 tons in 2028, perhaps as high as nearly 2 million tons further down the road. Better still, Teck will be accelerating its production at a time when global supply will likely become more constrained, though we do expect higher prices to encourage production growth over the longer term. Teck shares currently traded about 5.7 times their full year 25 EBITDA estimate. I believe there's likely 20% or greater upside from here, even with increased near-term macroeconomic risk. This was written in May. We're already starting to recover in the commodity space. We're already starting to recover in the energy industry. We're already starting to recover in the S&P 500 by May 15th when this article was written. So they are looking at 20% plus, not from the bottom of the April crash, but from May, which is pretty impressive. All right, quick look back here. Teck's fourth quarter results published February 20th were mixed, as with guidance for 2025, but neither really changed the multi-year thesis for the stock. Revenue fell 32% year over year as reported and 3% quarter over quarter, beating expectations by 4%. Revenue from the copper operations increased 47% to 1.67 billion Canadian dollars, about 60% of revenue, while revenue from zinc increased by about 59%. Year-over-year reported decline was caused by the sale of the company's metallurgical coal operations in 2024. Remember, metallurgical coal isn't like coal for power generation, it's coal for making steel. Adjusted EBITDA declined 51%, with margin down 1,150 BP to 30. I think they're saying basis points, right? To 30%. Like for like EBITDA, excluding the met coal operations, rose 160%, with the margin improved almost 13 points to 30%. Copper profits, up 160% to 732 million, were lower than expected, missing by 6%, while zinc, up 112% to 320 million, beat by 5. Cash costs for copper production were higher than expected, while production, up 19 and sales, up 24, were stronger than expected. Cash costs rose by 13% year over year, or almost 6% higher than expected. Zinc, on the other hand, saw a 38% year over year decrease in cash costs. Cool. Came in about 7% better than expected. Guidance for 25 was modestly disappointing and announced earlier in January, with the midpoint of estimated copper production about 2% below expectations and estimated zinc concentrate production about 5% below prior street expectations. Teck's estimate of net cash costs for copper were worse than expected due to lower expected molybdenum volumes, while estimated zinc cash costs were about 4% lower than expected. Management also modestly revised copper production beyond 2025 lower, with lower initial ramps from projects like I can't pronounce that word, but the Blanca expansion in Peru. Few fits and starts don't change the long-term thesis. Of course, it would be better to see Teck boosting its metal production estimates and lowering its projected cash cost estimates, but I don't think these negative revisions are meaningfully thesis changing. So basically, okay, there are some operational challenges in 25. Do you care? As an investor, seriously, do you care about that? Does that change why you're buying this company? If you're like me looking at, okay, I'm looking for a Canadian giant in a space that is going to see a huge boom because of a huge amount of government money flowing into a space, their operational challenges may be missing. Does that really change my thesis? Again, these projects are going to take 3+ years to really get started. And then we're talking like a decade of demand. Do you care about a year worth of operational challenge? Now, if it's repeated operational challenge, you do, because that shows the operator themselves might be responsible. But in an industry like this, where you have commodity pricing changing everything, where you have these giant operations that are, of course, affected by weather, by geopolitical events, by all sorts of things, you're going to have challenges. And of course, it's minerals. You're looking at a couple of percent change and you have like a billion variables going on, from the equipment you're using to the weather at the site, to the crew that's there, to the, availability of transportation. There's so much going on. So one-off operational challenges don't scare me in this space. Just flat out, they don't scare me. And so fits and starts, not a big deal. There's a couple of interesting things they mention here. They're spending a bunch of money in CapEx. They're going to expand production at Highland Valley in Canada and Quebrada Blanca in Chile. Also moving forward with greenfield projects in Peru, so new projects, and San Nicolas, Mexico. The latter two likely at about 250,000 tons per year TPA of copper production and attractive cash costs. For the back end development queue are two more mining projects in Canada, Lower Creek and Shaft Creek, the New Range Mesaba project in the US, and Nuevo León in Chile. So demand, they think, seems likely to increase. I think that this demand is far more likely to increase than the author does, thanks again to these big Canadian infrastructure projects. I think you're going to see even more demand if you continue to see a boost in American chip making and an American deterioration of relations with China specifically. If you see the Americans sort of starting to turn inwards on the metallurgical side when it comes to steel, aluminum, yes, of course. But then they start looking at other things, right? If they start tossing 50% tariffs up on foreign countries on copper, and Teck can either produce it in the United States or can get a pass through or whatever it might be, you're going to see this demand increase a lot more for Teck's resource specifically, even if the global commodity doesn't see the same boom. And so let's talk about their outlook here, and then we'll cover sort of mine. So they think that revenue could hit or expand or exceed 12 billion in 2028 with EBITDA margins in the high 40%. They think expansion will keep a lid on free cash flow growth in the near term, but as production expands, you could see those margins, again, up 20% plus, which is huge. They don't do a discounted cash flow as a precise valuation tool, sure, but they think it helps set guide rails. So sort of like they're not going to stick to a discounted cash flow model to say, oh, this is what the stock's worth at this point in time, which again, you know what, that's a fine tool for a general idea. But still, if they use it as a guardrail, as like kind of the high and low expectation kind of deal, plus or minus whatever percentage as a margin of error over time, they think they could see high single digit revenue growth over the next 5 years, support a fair value comfortably in the $40 for US traded shares specifically. Likewise, you get a 7.25 multiple on their EBITDA estimates. They get around $47. So makes sense, right? That lines up with their free cash flow estimate. So their fair value and the current multiple, if expanded to what they think EBITDA is going to be, both line up as a pretty substantial increase. Remember, that was about 20+% in the short term. So do I think this is a good stock to look at? 100%. But I think it is a great idea for the greater trend. I think right now that Canada's resource boom, this massive increase in spending in infrastructure, is a life-changing opportunity for us as investors. And I think we need to start looking at all the different options here that offer something. Teck offers a fantastic play on copper. It also offers the potential to be a critical minerals giant. So what else is there out there that offers something? Who are the engineering firms? Talked about a couple here. Who's going to help, build the projects? Who's the exploration and discovery? Who's going to build the infrastructure itself? Who's providing the workers, the equipment? Who's actually doing the heavy labor? And how could we, as Canadian investors, be part of the profit that this is going to bring? Because at the end of the day, that's what we do here on the channel. We look at what's going on in Canada and we say, how can we invest in a way that benefits us while maintaining a diversified, strong portfolio on top of our sort of secular plays? Now, let me know what you think about Teck Resources. Do you think they're going to make it as a critical minerals play? Do you think there's other plays in the space you'd rather be in? Talked about some junior miners on the company. Do you think that's the kind of space you'd rather be sort of, tossing your speculative money into? I'd love to hear your thoughts in the comments. Do you think we're actually going to get some of these projects done? Again, a lot of people are speculative. We like to say that nothing will ever change in Canada. Hey, you know what? The news headlines look good at least. So maybe that's a positive. Who knows? Let me know your thoughts in the comments. And of course, if you got any other companies you want us to talk about here on the channel, specifically Canadian preferably, but if it's, something that a lot of Canadian investors own, we do sort of venture out every once in a while. And with that being said, if you like this video, please like it. If you like what we do here on the channel, please do subscribe. And with all that being said, I hope I catch you in the next video.